Hi, everybody. This is Peter Schiff. It is Monday, February 27th, 2012. Well, finally, the rising price of gasoline is now in the headlines. It's in the news. It is a political issue. I have been forecasting that higher gas prices would become an issue because I had been looking at the crude oil chart, expecting it to break to the upside, and I knew gasoline prices would also move up. I still believe, though, that inflation in general, not just the price of gasoline, is going to be a much bigger issue in the November 2012 general election than is currently believed. But one of the problems that I see right now with this whole debate is I disagree with the way it is being framed. The Republicans are accusing the president or blaming the president for the high gas prices because they're saying his energy policy is at fault, that we're not drilling enough, that if we had a better energy policy, if we had approved the Keystone Pipeline or had more drilling, that gasoline prices would be much lower, and therefore the current high price of gasoline is the president's fault. The president is defending himself against these allegations by claiming this is nonsense, it's not his energy policy that is at fault. Even if we did drill more, it would not make a meaningful difference in the current price of gas. You can argue about maybe in the future, but clearly the gas today is not because of his energy policy. The president instead says that gas is getting more expensive due to global factors, economic growth abroad, tension in the Middle East, factors that are completely beyond his control, and factors that would be unrelated to current energy policy. Now, the problem is, both sides are wrong. The Republicans are wrong to blame the high price on Obama's energy policy. Now, I do believe that the Republicans are right, that Obama shares a lot of the blame. But it's not his energy policy that's driving it. It's his fiscal policy. His energy policy is bad, no question about it. And we should have an energy policy that permits more oil and gas exploration. But even if we had it, the current price of gasoline at the pump would not be marketably below where it is today. Could it be a nickel a gallon cheaper? Sure, maybe. I'll give you that. But would it be $2 a gallon? Not a chance, because it's not energy policy that is the principal driver, especially if you look at the facts that gasoline demand in the United States is the lowest it's been since 1997, I think, or 1999. But production is the highest it's been since, I think, 93 or 94. So there's plenty of gasoline. The problem is we're printing money faster than we are producing gasoline, and the supply of money is growing faster than the demand for gasoline is falling, at least here in the United States. So the real reason that gas prices are rising is not the president's energy policy, but his fiscal policy, because it's a fiscal policy of huge deficits that the Federal Reserve is monetizing. The Fed is financing these deficits by printing money. When you print money, the dollar loses value. Other currencies also lose value as they have to buy up the dollars that we export. But then they use their increased money supply that resulted from buying up our dollars to bid up the price of gasoline. So it's all this money chasing a finite supply of gasoline, albeit a growing supply, but not growing as rapidly as the global money supply. That is driving the price of oil. That is driving the price of gasoline. There is no other real factor. It's not the politics. It's not Iran. It's the Federal Reserve. It's the Bank of Japan. It's the Bank of China. It is the European Central Bank. Everybody is printing money, and money has less value, and so oil is more expensive. And so is everything else. And one of the other factors I've been pointing out, you have a lot of Keynesian economists who like to argue that you don't have to worry about inflation when you have lots of unemployment, because unemployed people means less demand. Well, that might be true, but what they always forget about is that a weaker dollar means less supply. When you create money and weaken the dollar, you contract supply. And that's what's happening with gasoline in the United States right now. Supply is diminishing because we're exporting more of our gasoline to other countries. And even though Americans are using less gasoline, they're paying more for it. And as a result, you can have a lot of inflation with high unemployment. In fact, historically, you have the highest inflation in economies that have the most unemployment, because when an economy is not fully employed and people aren't producing, then you don't have as many goods created to offset all the money that's being printed. In fact, governments often try to stimulate a high unemployment economy by creating inflation, and so it lays the foundation for higher inflation. So we're just getting a small taste of it right now, but both parties are wrong. Yes, you can blame the president, but not for the reasons he's being blamed. And the president is right to criticize those who are labeling his energy policy as being at fault, but it lets him off the hook. I wish somebody would criticize the fiscal policy and blame the high oil prices on the big deficits and the money printing, because I'd like to see the Obama administration try to defend itself against that. Of course, it's not just gasoline prices that are going up. Other prices are rising. Of course, nobody is complaining about those prices. For example, the stock market. The Dow did peak above 13,000, didn't actually close above, but it's very close to it right now. And of course, there is a lot of bullish talk out there on Wall Street and in the financial media about the strengthening Dow. And of course, there is news out there that analysts are interpreting as evidencing a growing economy. And a lot of people are also making the mistake of assuming that because the stock market is rising, it must mean the U.S. economy is improving. After all, that's why the stock market is going up. It is factoring in the improving economy and the more robust outlook for corporate earnings. But remember, the stock market can rise even if the economy is not doing well. In fact, the stock market can rise if the economy is doing lousy. That was the case for much of the decade that we just finished. In fact, the entire period from the bursting of the stock market bubble to the bursting of the housing bubble, the stock market was rising. The GDP was growing. And a lot of people misinterpreted those numbers as signifying a good economy, a robust economy, a Goldilocks economy. I remember all sorts of expressions that were used to describe what everybody thought was great. But it wasn't a great economy. It was a bubble. It was an illusion. It was a phony economy built on debt. A lot of that debt was financed by housing. This phony economy is also built on debt, but it's mainly government debt. It isn't a housing bubble or a stock market bubble, but a government bubble. We have all this spending and all this printing, and as a result, the economy seems to be improving because we're spending more money. But we have to pay the money back, or we're going to suffer the inflation which was used to finance the spending. But of course, if we have to pay the money back with interest, then what happens to the economy? What happens to the jobs that were associated with spending the money when the money has to be paid back? What happened to all the phony prosperity when the housing bubble burst or when the stock market bubble burst? We have to stop trying to replace one bubble with another, one era of false, phony prosperity with another, and we have to learn from our mistakes. We can't keep repeating them endlessly. Now, I know eventually we're not going to be able to, because we're going to destroy the dollar and we won't be able to repeat these mistakes. And I think we are on the doorsteps of that right now, what I've been calling the final overdose of stimulus that ultimately kills the patient, which in this case is the U.S. economy, because the more the government interferes and stimulates with cheap money, the more difficult it is to solve the problems, because instead of dealing with them, we simply make them bigger. But again, that is why the oil price is going up. It's the same reason that the stock market is going up. So you have people out there saying, hey, the stock market's going up. That's great. But oil prices are going up. That's bad. They're going up for the same reason. If people want to bring down the oil price, if you've got these Republicans that are out there saying, vote for me and oil prices will go back down to $2 a gallon, gasoline prices are $2.50 a gallon, the only way we're going to get lower gas prices is if we get lower stock prices in the bargain. Right? We're going to have a reduction in the money supply. We're going to have higher interest rates. We're going to have to let the recession happen. Only if the Fed stops doing that and adopts a sound monetary policy are we going to get a reduction in oil prices. If we keep artificially stimulating the economy with cheap money, yes, we can get higher stock prices, but we also are going to have higher gas prices and higher food prices. And the cost of living is going to go up. And the sad truth is the increase in the price of stocks is not going to keep pace with the increase in the cost of living. And so people may think they're getting richer because their stock portfolio has a bigger number, but they're really going to be getting poorer because when they go to spend that money, they're not going to be able to buy as much. And it's even sadder for people who are living paycheck to paycheck who don't have a stock portfolio. And so the rising stock market doesn't help offset the diminishment in the value of their wages or whatever small savings that we're able to put away. All they do is lose. So in other words, all this talk of an economic recovery is just one big fantasy. It's one big lie. And speaking of big lies, finally, Warren Buffett comes out and admits he's full of it. You can see this interview. It was on CNBC today. Joe Kernan was interviewing Warren Buffett. And I sent him a bunch of emails. I sent Joe Kernan some emails, questions to ask Warren Buffett. And he actually read one of them pretty much verbatim from the way I sent it to Joe Kernan. Although, he didn't actually admit that the emails were coming from me. He says, Warren, I'm getting all these emails. Yeah, he was getting all these emails from me. I sent him about 5 or 6. But I pointed out to Joe the hypocrisy of Warren Buffett. And I said, Joe, you got to ask Warren why it is when he talks about the low taxes he pays, he only talks about the 1% of his income, and it's actually less than 1%, that he earns personally. That he never talks about the 99+% of his income that he earns as the largest shareholder of Berkshire Hathaway. I pointed out to Joe Kernan that Warren Buffett's personal share of the taxes that Berkshire Hathaway paid in 2010 was over $2 billion. That was just Warren's share. So that dwarfs the 15 or 17 million he paid individually. So I said, Warren, Joe Kernan, ask Warren Buffett why he doesn't count that as part of his income. After all, he counts his shares of Berkshire Hathaway as part of his net worth. He owns a third of the company. A third of the income that Berkshire Hathaway generates is Warren Buffett's income, as is a third of the tax liability. And guess what Warren Buffett said? He didn't deny it. He didn't say Joe was wrong. Here's what he said. Warren Buffett said that, I am planning on donating all of my Berkshire Hathaway stock to charity. Therefore, for that reason, I'm not including that taxable income because that probably belongs to the charities or the philanthropies. So in other words, Warren Buffett admitted that the only reason his tax rate is so low is because he is planning on giving over 99% of his income away in charity. So it's not because of the tax code. It's not because we have a tax code that coddles the rich, which is the narrative that is being, all over the media, all over politics, with Warren Buffett being the poster boy. No, that's not the truth. Warren is saying, no, I'm paying a low tax because I'm giving 99% of my income to charity, and that's how I avoid a 50% tax bracket, which is really what he would have if you add the 35% a corporate tax to the 15% personal tax. The way he avoids that 50% tax is by giving over 99% of his income away to charity. Now, I wonder if the public would have a different view of the Warren Buffett tax situation if they knew that the only way he was able to lower his taxes was by giving all of his money away. Because after all, most people don't object to rich people giving all their money away to charitable causes. They maybe object if they use it for themselves. But Warren is not doing that. So this is very disingenuous. In fact, that's a good word. I think it's a lie for Warren Buffett to be out there claiming that he's not paying any taxes when he knows he is. In fact, what he's saying is, I'm not paying it. The charities are going to pay it instead because I'm giving my money to charity. Well, you know what? That's Warren's prerogative. If he wants to give 99% of his income away, more power to him. But everybody might not want to do that. There are other people who don't want to give 99% of their income away, who are working because they want to enjoy their income for themselves, and they don't want to pay higher taxes just because Warren Buffett is able to perpetuate this lie and force other people to pay Warren higher taxes that, again, are not really going to affect Warren, because no matter how high the personal income tax rate goes up, it's not going to affect Warren Buffett, because he's only earning not even 1% of his income on the personal level. He's earning the other 99% at the corporate level. The taxes aren't going to affect that, and he's simply just going to give that money away anyway. Anyway, that's the truth. That's it for today. Again, don't forget to listen to the Peter Schiff Show every weekday from 10 a.m. to noon, Monday through Friday, again, at schiffradio.com. Bye for now.